Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news. China is wrestling with how to respond to its slowdown, with the measures announced so far causing volatility. But first up today, as expected, the American CPI inflation rate fell in September, but by less than expected. It came in at 2.4%, down from August 2.5%, but above the expected 2.3% rate. For 3 consecutive months, the month-on-month rise has been 0.2%, so it is tracking at the annual rate as well. The overall inflation situation remains pretty benign. No one will be overly worried about this data, but it will reinforce to the Fed that outsized rate cuts at this time are probably not warranted. Initial US jobless claims, however, spiked sharply last week, which probably has more to do with the Florida storm impacts and perhaps the Boeing strike than any meaningful slowdown in the US labour markets. In China, money flows around their surging equity markets are creating issues for policymakers. Huge amounts have flowed out of wealth management products, chasing the expected equity market gains. But foreigners and some local professionals seem to have taken the opportunity to cash out of the rising market. And as the rises haven't been sustained, there may be a lot of very disappointed local speculator investors. But help may be on the way. The central bank yesterday announced the start of a key operation to prop up the stock market that put a floor under the market, embedding the Beijing put. And all eyes will be on an announced weekend briefing by Beijing authorities on their next economic policy moves. And German retail sales unexpectedly rose in August for a second straight month, to be now 2.1% higher than year-ago levels, something few saw coming. That is actually their best year-on-year growth since April 2022. Further, this is a real after-inflation result, so it's quite strong. Food and travel volumes rose the strongest. Container shipping rates fell again last week to be down 4% from the prior week, which takes them back to levels at the start of 2024. They are still elevated because they are 135% higher than pre-pandemic levels, and the reasons still relate to Middle East security pressures. But clearly the world and the industry are finding ways to adapt. All the current weaknesses are around China outbound rates. The US Treasury 10-year yield is now just on 4.10% and up another 3 basis points from yesterday. And the price of gold will start today at $2,621 an ounce and up $12 from yesterday. And oil prices are up $3 at just under $76 a barrel in the US, while the international Brent price is now just over $79 a barrel. And the Kiwi dollar starts today at 60.8 US cents and up 20 basis points from this time yesterday. Against the Aussie, we're also up 20 basis points at 90.4 Australian cents. Against Euro, we're up 30 basis points at 55.7 Euro cents. That all means our trade-weighted index starts today at 69.1 and up 30 basis points from yesterday. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.